This question is from Manolo Salceda, and I'll preface it by saying he says that he is a true admirer of Buffett and what he stands for, so please don't confuse my bluntness and straightforwardness with a lack of admiration or empathy with this amazing person and his master creation. With that disclaimer.
Yeah, but.
His question is, you've stated several times in the past that if management, you, wasn't capable of delivering a better return than the index, then management wasn't doing the job. Then you said that the yardstick should be any 5-year period. You've just missed your 5-year period comparison. How come you didn't tackle the issue in your annual shareholder letter? Are you changing the yardstick, and what's next?
No, we're not changing the yardstick, but I would point out that we said actually in the 2012 report, and it's in the upper half of the first page, we pointed out how we do worse in very strong years and better in poor years. And I said then, if the market continues to advance in 2013, our streak of 5-year wins will end. I didn't say it might end, or could end or anything. It was obvious that if you have 5 strong years in a row, we will not beat the S&P, and that will be true in the future, for sure. And of course, last year was, I think there were 2 years in the last 40 or so that the market was up more than it was last year. So, despite the things mentioned about President Obama, the stock market seems to have done quite well. We will underperform in very strong up years. We'll probably more or less match in moderate up years. We'll do better than average in even years or down years. And I have said, and I'll continue to say, and it's been true, that over any cycle I think we will overperform, but there's no guarantee on that. But it was clearly said, like I say, on the first page of the 2012 report, that if the market went up, we would have a 5-year streak of underperformance, and that's exactly what happened. Charlie?
Well, we should remember that Warren's standard talks about net worth of Berkshire increasing after full corporate taxes at roughly 35%. And the indexes aren't paying any taxes. And so Warren has set a ridiculously tough standard and has so far met it over a long period of time. In the last couple of years, the net worth of Berkshire, after full provision for income taxes, went up, what, 60?
Something like that, yeah.
$60 billion.
Yeah, pre-tax probably $90 billion.
Yeah, and so if this is failure, I want more of it.